post-COVID world? Well, maybe. And the question is real estate going to continue to boom? I think this is on a lot of people's minds. I know even Google is reporting some really, really high search rankings on questions like, should I buy a house? These things are happening in real time.
It is. Well, I think we got to go back. First and foremost, is it post pandemic? I don't know. All I know is that with the vaccines rolling out, vaccinations happening, things are starting to open up. Already, we're hearing. We've been hearing now for probably a month at least that things seem to be slowing down. Well, what does slowing down even mean? When you go from 120 kilometers an hour to 80 kilometers an hour, you're just doing the speed limit, and maybe it just seems a lot slower than it is, because at the end of the day, those hot markets are still pretty hot. They're just not what they were, let's say, a couple of months ago. But is the boom over? It's an interesting question. I actually saw somebody tweet that out. So much for the real estate, the pandemic. What was it? How did it go? So much for the pandemic-driven real estate boom. I went, really? I don't know.
Well, the fact is, Patrick, is right now this real estate market is being heavily subsidized. I'll use that word carefully. Heavily subsidized by influencers, many different influencers, interest rates being one of them, supply and demand being another one, work from home being another one of them. Obviously, the pandemic-driven stay-at-home measures have changed people's lifestyle. Now they're much more concerned about space. They're much more concerned about lifestyle. They're much more concerned about not being downtown. So all of that is really driving a lot of this. And I think we should dip into every one of these conversations, Patrick, because it's not one thing, it's many things. So let's start with interest rates, let's say.
Well, yeah, there's lots of talk. Are interest rates going to go up? Are they going to go down? What's going to happen? Are they going to go negative? In some regards, they're kind of negative now given inflation, but it's a different conversation. I mean, here's at the end of the day, we know that there's a lot of confusion, both home buyers and real estate investors. Part of that is the interest rates. There's some fear around interest rates. But, let's look at interest rates and what is it going to take? It's been stated, I loved what somebody said, one of the economists said, which is that interest rates are a blunt instrument. So in other words, you can't just arbitrarily lower interest rates, for example, to slow the housing market down, because it has other effects, and it has big effects, for example, on the economy overall. And right now, Canada's economy is being driven primarily by housing construction, investment, home buying. That the ripple effect of that is huge. And so the government's got to be a little bit cautious, not only how much, but also, Benjamin Tall pointed out, JG, how quickly. His fear is that they panic because they leave it too long, and then they just, bam, one big hit.
I could guarantee you that's going to happen, Patrick, because there's anything the government is 100% guaranteed good at, is they do too little too late, and then they do too much, and the pendulum swings. So I can pretty much guarantee that is going to happen at some time. There's no doubt about it. But now, with regards to interest rates, Patrick, we're seeing a lot of headlines that are really grossly misrepresenting things, like interest rates to rise 40%. They're at historic lows. They've never been this low. Even if they go up 40%, that's still below where they were pre-pandemic levels. So, of course, there's only one place for interest rates to go, and it's up. But real estate investors shouldn't panic by this. But you can expect they're going to go up. If it's not in the next quarter or in the next year, they're going up. I can guarantee you that.
Yeah, I don't know. I don't have any data to support it, but I do believe it'll be 2022 before we see anything that really matters. My thought is Bank of Canada may just kind of test the waters with 0.25%, let's say, and of course what we'll see there is probably a little bit of a pullback. But here's the issue around all of this, JG, right now, is that when we look at what's going to affect the real estate market, what we can't get over is the supply and demand issue. And the supply and demand issue continues to be a challenge, particularly when we look at BC, when we look in certain parts of Ontario. Let's say Alberta, not so much, but supply and demand continues to be an issue overall. And we haven't even we haven't opened up the borders So we haven't got the immigration. So imagine what's going to happen, assuming that we're going to get some immigration happening. Uh, this is all to say that we have to look at where real estate's going and what we see in the future. And to be honest, all of this is being driven by influencers right now. Things like interest rates. Let's just use that one primary example right now. The pandemic, that's an influencer. But I think that has actually created an interesting shift in trends. And so will housing, first off, I don't believe for a minute, and JG, I don't think you do either. I think we agree on one fundamental thing is that there isn't a real estate bubble that's going to pop. Now, could there be another black swan event? Yeah, absolutely. We have to look at what's happening with the government, Bank of Canada printing money and all of those things. But is there going to be a black swan event? Maybe. It's always a possibility. But we don't see a pop, but we do see real estate maybe softening a little bit. My guess is that later this year, early into 2022, we'll see some price pullback, but that'll be regional and it won't be, it won't be significant. That's my view.
Well, Patrick, we're already seeing some price pullbacks in the REIN Channel. We're doing market updates. It's one of the shows we produce, and we're already starting to see some pullbacks in certain markets. We're already starting to see it, crest over. But let's talk about supply and demand. You talk about a supply and demand issue. It's not a supply and demand issue. It's just a friggin' supply issue. And
Totally.
and the longer this goes on, and this isn't created by pandemic. This isn't created by anything. This has been happening for decades now, and we are entering a precipice of supply challenge that is brought on by the impediments that are created by our government institutions that make it difficult for developers to build. What should take us months to execute takes us years and years and years. I was on the phone with a developer recently, Patrick, and he told me that back in the day, they used to be able to do a complete subdivision in 5 to 7 years. He had been doing real estate for 50 years. He said it used to take 5 to 7 years. It now takes 15 to 30 years to plan a project of that magnitude. I mean, no real estate developer, and I play on a very small scale in that world, but no real estate developer is going to tie up their capital for 15 to 30 years to have a municipality yank it away from them over time. So this is absolutely ludicrous. And you know what? I'm going to keep fighting this issue until we get somewhere. But that's that on the flip side. That's the difficulty I have with the market. But I will say this: that difficulty creates one of the most incredible competitive moats for us real estate investors. We are going to have an amazing. The demand is not going to stop for rental housing providers. That you can for sure bet on that. It is not going to stop, especially if you're in the right market, especially if you're backed by economic fundamentals, especially if you're making data-driven decisions. Demand is going to be phenomenal, and the lack of supply is going to make sure your real estate is going to be worth more and more and more. And this is nothing but a good thing for us investors.
Yeah, and if you got a long-term view, you're going to win. And if you're paying attention to the regionality of what drives a market, you're going to stay ahead of the game. But to your point around the supply issue, you're right. Municipalities continue to choke down. The bureaucrats continue to choke down. I heard a stat from kind of along the line, not as much as you had heard, but or what, not the time frame you gave, but I heard from the time a developer finds that land, buys the land. So now they own the land. It's a minimum of 10 years before they get the permits or the application process completed to even put a shovel in the ground. So
yes,
this goes back to, this just grinds my gears. I mean, it just gets me going because we've got the politicians on the other side of that frickin' equation, blaming investors, blaming foreign investors, blaming fricking everybody for the supply issue because, there's all these units sitting empty in Vancouver. Well, gosh, open up and give people the opportunity, give developers the opportunity to develop, and some of that will come off. So it's a bigger conversation, but it's the one thing that isn't talked about a lot. I know it's starting to finally come out and start to actually shine a light on where responsibility lies. And the responsibility lies a lot with the municipalities, with the cities, and with the regulations of the provinces that are trying to satisfy the the NIMBYs, for example, that don't want certain housing. So we can't. It's kind of like they're talking out both sides of their mouth, and politics over policy. Maybe some tough decisions need to be made, especially when it comes to affordable housing. But again, as investors, as rental housing providers, especially the individuals like us, the small mom and pop, if you will, investors like are part of the REIN network. These are really great supply potential for renters, and that's just at the end of
Yeah.
the day, that's what investors do. Okay, so let's jump around a little bit. So, dude, amazing the data that we're seeing of what's happening in Vancouver and Halifax of work from home professionals moving to Halifax. And interestingly enough, many are moving to Vancouver as well, which is more expensive. So, and Halifax is like, you got average house prices of 450,000. So it's like, this is that work from home trend. I've said from the start that, as many people saying it's going to go back to the office, I think we got a couple things going on. Number one, you got a bunch of professionals that are going, no, lifestyle and actually efficiencies and cost. Halifax is a perfect example of what's going on. We're seeing this more and more. And I think that's a trend that's going to be here. How many who knows what it's going to be? But something else I'll make this one. I'll state this for the record. You know what the other issue is going to be? Because we're seeing it, anti-vaxxers. And those who don't want to get a vaccination, I don't have an opinion of it. I'm just saying that there's those who don't want to get vaccination. Guess what? Some of the bigger corporations are saying, how do we bring them back to the office? We can't. There's going to be pushback from those being vaccinated. I mean, what a polarizing topic. But that aside, so now those individuals are going to be work from home. The non-vaccinated are going to be forced to work from home, or they're going to want to work from home, whatever that story is. Once again, I don't have an opinion. This is not a view. I'm looking at it from an opportunity, which means work from home. Those that aren't vaccinated are going to continue to do that, which is going to open up opportunities in other centers where lifestyle. Let's look at Canmore, for example, just outside of Calgary. We talked about Halifax. Look at some of the interior British Columbia. I mean, those are lifestyle choices where you get to work from home and have an amazing lifestyle. So I don't know. I think there's some cool trends of emerging.
Patrick, I'm gonna stop you right there, because you've said you don't have an opinion 4 times, and we all know that that's not the case. You definitely have an opinion, that's for sure.
But my opinion,
my opinion
doesn't matter.
I understand. That's not for this show. But my point is this. I do agree with you. But this is human beings, right? And as investors, we got to realize we're human beings first. We're investors second. And when things like work from home started, everyone thought no one's ever going back to the office. I mean, literally, people thought that 80-90+% of corporations were never going to open up again. And that was just ludicrous. But that's what happens. We think like a pendulum. And I want every investor listening to this to realize that they do it too. I do it too. Patrick, you do it too. Every one of us thinks like a pendulum, and we always swing too far. And it's work from home is an incredible opportunity, and I guarantee you there's lots of people that are going to work from home permanently going forward, but it ain't going to be the majority of workers. Nope. It is going to be much more than it used to be, but not the majority, not even close to the majority. So it will open up some markets, but you will see, and this is another danger zone for investors, you will see markets which have wildly appreciated because of work from home. They're going to give some of those gains back. They're definitely, you talk about a bubble not bursting, and I agree. I don't see a bubble bursting either, Patrick. But you may see a little bit of a pullback in some centers. You may see a much larger pullback in other centers, depending on what happens with this work from home and how that impacts the migration patterns.
Well, yeah, but so thanks for clarifying that. I'm not here to imply that it's going to be huge, but let's put it this way. it's an opportunity for investors to supply a certain demographic and to pay attention to that demographic. Let's say it's only 25% of the original group that went to the office now stay at home and work from home. That opens up a huge opportunity for investors to be a supplier of rental housing for those individuals. Because here's the other thing is a lot of those professionals, given the house prices, depending on what market they're in, they can't afford a down payment on a house. So what are they doing? They're having to rent. So then be the rental housing provider that caters to that specific cohort. And I think there's some opportunity there. That's what I'm suggesting.
Yeah, and you said something interesting a while ago, Patrick, and you're absolutely right. Investors have to look into the future. And I was actually just this morning, I went to Starbucks with my wife to pick up a coffee and some breakfast, and we're driving back, and you know what she said, and this is fascinating. My wife doesn't do active real estate investing like I do on a day-to-day basis, but she's been around it long enough. She says this, Patrick, she notices that that business is closed and that business is closed and they are empty and they are empty. And she says to me, maybe now is the time to pick up a few more commercial buildings because she's looking into the future of where it's going to be, not necessarily where it is today. And that's a key trait of good real estate investors is they're looking forward, and they're not looking forward months, they're looking forward years, and they're thinking decades into the future of how work from home is going to make a permanent impact, how a driverless smart cars is going to make an impact, how electrification is going to make an impact. I mean, those are the conversations you should be having as a real estate investor, thinking forward 10, 15, 20 years and positioning yourself today for those future gains.
Yeah, of course, when the pandemic came up, there was the term that was talked about, which is the Great Reset. Now, there was lots of conspiracy theories around the Great Reset and all of the rest of it. But at the end of the day, conspiracy aside, whatever that meant back then, it has a different meaning, at least to me today. This is a reset. The pandemic has created a reset in many aspects of what we're doing. JG, you and I have been looking and talking a lot about, as much as there's inflation, we're looking at the deflationary impact of the technology that's being driven. Just imagine how green we are, considering how much we're using Zoom as an example, or we're using FaceTime or whatever, video conversations we're having. I mean, gosh, a year and a half ago, we were pretty advanced. I mean, we used Zoom a lot and we were there, but lots of people, they didn't even know how to spell Zoom at the time. And a video conference was off the charts. But that's actually deflationary, given we don't get in our car, we don't burn gas, we don't drive, there's no wear and tear on our vehicles, we don't stop along the way to Starbucks to pick up a coffee. Those are deflationary things that are happening. That's just one example. So as much as we talk about consumer price index and the inflation and the cost of things, which is true, there is another side of it where the cost of things is coming down in many ways, and deflationary things are happening that we also have to pay attention to.
Absolutely. And those are the kinds of things we always dig into at REIN Channel, Patrick. Whether it's the real estate news show, whether it's our market updates, whether it's our Get Real segments where we're always talking about the various different things and our opinions around them. But that's what the REIN Channel is all about, for people to really get dialed into real estate conversations, because there's so much happening out there in the world, Patrick, where it doesn't affect real estate investors the same way. It has a different effect on them. And real estate investors have to hear things with the filter called a real estate investor. And that takes time to get into that mode. It takes time to get into that thinking. And that's what the REIN Channel is all about.
Well, we delivered the REIN Channel, but and I'll say, we're talking to investors every day, and we talk to the REIN community on a regular basis, and we said right from the get-go, this would create opportunities never seen before in the real estate market, and it is. And those opportunities are showing up in different ways, and we're actually now only starting to see new opportunities emerge. And so for those of you who are sitting on the sidelines and thinking about investing in real estate, I think I would encourage you to step off of the sidelines and actually start taking action in some well-placed real estate buys. Real estate's still a very, very good opportunity in Canada. I know it seems like prices are going into the stratosphere and this has got to pop and all of the stories that are around it. But when you look at what's happening economically, man, it's hard to see anything that's going to take it off the rails in a significant way, short of, like I say, a black swan event. I mean, when we look at GDP growth, by the way, JG, because we talk about this a lot, economic fundamentals, GDP is off. okay, to those businesses that are shut down that Gary was pointing out today. We see that in every city. But those are going to start to come back. That's actually going to start driving and supporting real estate growth. It's all part of the process, right? And so,
It already has in many ways, Patrick. There are many provinces that are now ahead of pre-COVID numbers. Their GDP numbers are ahead of pre-COVID numbers. Some provinces now. That doesn't mean every city is. That's where the
yeah.
regionality becomes important.
Yeah. And I mean, whether you agree with Bank of Canada and the feds and the printing of money and all the rest of it, that is just what it is. And so we can get into the debate of whether that was right or wrong, or at the end of the day, we keep doing it. They're doing what they're doing. And our job as investors is to look at it and see where the opportunities are for us, given what's happening and where we want to be in the future. And I think this is just a great opportunity. It just continues.
Patrick, this has been an awesome conversation, man. And hopefully, folks, you guys have enjoyed it. We hope you like and share this. Put a comment and get involved in this conversation. I mean, join the REIN channel. We have a free trial happening right now. Absolutely a limited time offer, free trial. So get involved, get in the conversation. And like Patrick said, you know, if you're on the sidelines right now, you really got to think twice about the sidelines, because I promise you what's going to happen is in a couple of years from now, you're going to say, shoot, I should have got off the sidelines. I should have listened to Patrick Francie. It's time to think about it. It's time to get into action.
Well, this is interesting. What's so funny about this? Imagine, JG, imagine how many investors were sitting on the sideline pre-COVID who's saying, well, no, this market's too weird. It's too hot. What's going to happen? And they sat on the sidelines and, you know, they missed, you know, 30% upside in many regions.
Yeah, absolutely. Folks, we're going to see you at the REIN channel. Get your free trial now, and hope you've enjoyed this conversation. Patrick, thank you very much, pal.
Thanks, JG.